everyone, a very good afternoon. You're watching the newsroom on ET Now. I'm Mubina Kapasi. Markets seem to be rebounding pretty nicely. We have the Nifty 50 that is gaining more than 1% in trade, manages to hold on and clutching on to those gains, crosses the 11,800 mark, and this rally has also catapulted the Sensex to back above the 40,000 mark yet again. Let's tell you what are the big movers and shakers and what's keeping the equity markets active today in trade. Cadila is definitely the stock in focus. It's a more than 8% rally being witnessed on this counter. And this is the impact of the second quarter numbers that were delivered. It's a strong Q2. The top line was at 3762 crores. Profit after tax quadrupled to 473 crore rupees. North American sales were higher by 18%. And in today's trading session, we are seeing a lot of fresh longs seen with the open interest as well higher by 28%. Meantime, as an ET Now news break confirmed, we told you first yesterday about how Hindalco Vedanta have emerged as among the key bidders and the highest bidders, for the India's first commercial coal block auctions, and it's official now. Hindalco has put in the highest bid for the Chakla Coal Block in Jharkhand. Vedanta has done so for the Radhikapur West Coal Block. Interestingly, Vedanta outbid Jindal Steel as well, which was also vying for the Radhikapur West Coal Block. Hindalco, meantime, of course, massive momentum being witnessed over there, more than 3% higher. The entire metal space, for that matter, is actually, buzzing in trade. Another interesting set of numbers came in from Shriram City Union Finance. Taking a look at what this company did in terms of the numbers, and seeing the key parameters of what they did in terms of the profit after tax, in terms of the top line. Interesting, really, it's a mixed bag. You wouldn't say it's entirely positive, but it's been more or less of a mixed bag. And additionally, if you look at the valuations as well, it's just one time the price to book. And in the last 1 to 3 odd months, we've seen a double-digit jump come by in the counter. Okay, NTPC, lots of news triggers around this one. They've released their second quarter numbers, but apart from that, they've also announced a buyback. So that as well will keep the stock in focus. It's tempered off quite a bit though, mind you. And then we have Fine Organics, which also delivered its second quarter numbers. Well, it was an okay-ish set. The stock was actually declining a little in trade. We had Fine Organics, which saw its revenues largely flattish at 271 crores. The profit after tax declined to 32 crores versus 56 crores, which we saw in the corresponding quarter. Stock price as well is falling today in trade. Moving on from earnings already delivered to earnings expected, we have Pankaj Podar joining us with Sun Pharma. That one will be coming out with its Q2 numbers today. Pankaj, what can we expect?
Q2 numbers.
So, when we just talk about Sun Pharma, Mubina, it's the largest market cap company in the pharma pack, and definitely it will be the most eyed number once it is out today. So when we just talk about the numbers are not expected to be that great, but at the same time, there is a cost saving element which is expected across pharma companies, and Sun Pharma, of course, is no different with their India business. 10% sort of savings is nothing, for the company, the size of 3,500 crore sales that they have in India. Now, 8,393 crore, that's the number when you look at on the sales front. The profitability is expected to be 1,192 crores. India business last time had some restructuring of Aditya Medicaid. So, once you adjust for that, the numbers are expected to be absolutely on the flattish side. When we talk about margins, EBITDA in excess of 20%, that's something which the street would eye out for, and that's something which essentially the street would take a note of. So that's something to watch out for. 22.5. US business, we already know the Taro numbers, so there's not much of surprise element over there. But when we talk about the India business, it could be flat. But again, as I told you, base last year was pretty high.
Okay, thank you, Pankaj, for that. We'll also have Dabur from the FMCG space that will be pronouncing its second quarter numbers. We have Vinny Motiwala joining in. Vinny, over to you.
So in terms of numbers from Dabur, we are expecting a revenue growth of around 5% this time, while in terms of profits of the company also we are expecting the bottom line to increase by 9%. Margins are expected to marginally increase, like only a 50 basis point increase in terms of margins, and margins are expected to be at 22.6% versus 21%. Important number here is going to be the volume growth. The domestic volume growth is expected to come in at 6% this time, and this will be after 2 consecutive quarters that finally we are seeing a volume growth. Last 2 quarters we had seen a decline in volume growth, obviously due to the overall pressure of COVID that had impacted most companies. Moving on to other factors that we'll be watching that are actually leading to the growth, obviously for the company does have a good rural salience, so the rural tailwinds plus overall the new product launches as well as the core herbal portfolio is expected to do well, and that is what is going to be leading the growth for the company. Health and hygiene segment is expected to do well. Obviously, Chyawanprash will be continuing to do well, while pressure on the discretionary items is expected to continue, like in terms of home care as well as juices. It will be improving sequentially, but still some pressure over there. Now, obviously, what is driving the margins is the low advertising spends and other expenses which have been cost cutting by the company is what is expected to drive the margins, by 50 basis points. The expansion is what we're expecting. So that is what is leading to the improvement in the margins. While in terms of the international business, we expect obviously a sequential recovery in terms of the international business of the company, but the decline, the MENA is what is going to be dragging the overall international business. So that is something that we're going to be watching out for.
Okay, thank you for that. We'll take a very short break right here on the show. Don't go anywhere. Welcome back to watching Markets at the Newsroom on ET Now. Times Network Special Investor Education Initiative Nivesh Ke Funde will seek to guide investors on better managing their financial portfolios and also provide them with simple explanations on how some financial products work. On this edition, we are looking at ETFs or exchange traded funds.
One investment avenue which has been gaining popularity over the last couple of years has been exchange traded fund or ETF.
That's true. Now, ETFs are funds that invest in a debt or equity index or commodities like gold.
Yeah, their expense ratio is low since they are passive investments, so they're available at a low cost to investors.
For example, an ETF that's based on a market index will invest in stocks of the companies in the same ratio as they're represented in the index.
So the performance of that ETF will rise and fall almost identically to the performance of that index.
To invest in ETFs, an investor will have to have a demat account as they are bought and sold through the exchanges.
And this very aspect makes ETFs highly liquid since they can be bought and sold like regular stocks at any given point of the day.
So do consider adding ETFs to your portfolio. That's all from us on this edition of Nivesh Ke Funde.
Okay, well, moving on from the US elections to this is one of a mega exclusive with one of India's largest airlines, and that's Indigo, which seems to have flown out of the crisis. At least that's the word coming in from the CEO, Radhikapur Datta. In an exclusive interview with ET Now's managing editor Nikunj Dalmia, he said that he is hopeful of 100% domestic capacity by April. He also spoke about the measures the government needs to put in place and the painful decisions that it had to take on the employee front. Listen in.
And as long as the economy remains or gets stronger over time, and the confidence in flying is already there, all our projections say that the demand growth is going to be high. If there's one area we need some help from the government, it's actually on the international. Because while domestic is already at 60% capacity and going towards 80%, I hope, international is only at 20% of where we were before. And the government is doing some actions in terms of bubbles and Vande Bharats and all that, but we need more growth in international. And while Europe is really struggling, I think closer to home, places like Sri Lanka, Nepal, Bangladesh, Singapore, Thailand, I think that's where the government should make a serious effort into adding more frequency and flights, because there we are really constrained only at about 20% of our earlier capacity.
So what is the sweet spot at which, in terms of capacity utilization, your cash burn becomes zero?
total capacity, that's now including international, we need to be at least 85-90%. So I'm hoping that domestically we get to 85%, 90% early next year. International will probably be, again, these are my aspirations, depends on how the government behaves also. And I'm hoping that by September of next year, we are back to international full capacity as well. So look, bottom line, I think Indigo is out of the crisis. I was very worried we'd be in a crisis. Now everything I look, it's a matter of timing. Is it now? Is it next week? Is it next month? It's really a timing issue. But the crisis scenario is beginning to disappear slowly.
Wonderful. Final question, and a lot of companies and sectors, Mr. Datta, which have gone through pain, employee cost, salary slashes have happened. Few companies where things have normalized, they've decided to hire now, roll back salary cuts. If things stabilize for the aviation sector and for Indigo in coming quarters, in coming months, should we expect the same from you?
So we had three series of painful, three sets of painful employee decisions to make. One was pay cut, one was furlough or a layoff, and the third was leave without pay. So we're not, we'll go back in reverse, if you will. So leave without pay, we are gradually reducing. Obviously.
Okay. All right. Well, that, of course, was the big ET Now exclusive. Moving on, BlackRock has upgraded emerging markets to an overweight stance, and they are citing three key factors. Number one, increased fiscal stimulus. The second, a more predictable U.S. trade and foreign policy. And thirdly, a weaker dollar. They continue to price in a Democratic sweep, and along with Joe Biden's expected victory, according to BlackRock, would come and better infrastructure spending. And also they mark how China and EMs have managed to control the COVID outbreak in a better manner. Additionally, MSCI Asia Pacific Index has any which ways outperformed the US peer. So BlackRock upgrading emerging markets to overweight, and that's the big story. Okay, well, keeping it then with the US elections, my colleague Chandra Shrikant joins us now with some very interesting analysis, details on states where the battle between Democrats and the Republicans would be interesting to watch.
Call it a US election 101 of sorts. I'm going to take you through some of the key numbers that you really need to know today. So if you look at the total number of electoral votes, it's 538, but the winning candidate needs the 270 number to be declared a winner. Now, this is a very crucial electoral college vote, so 270 is going to be the winning number. In terms of the number of eligible voters in the US, the voting age population, there are 255 million people, out of which 1.9 million are Indian Americans. Interestingly, this time around, almost 55 to 60% of the electorate has already voted. So over 94 million early votes have been logged through methods like in-mail ballots and others, which is why people feel that there is going to be a delay this time in tabulating all these votes. Now, in terms of Biden's average in the national poll so far, it's a comfortable 8%. We have to see what happens in the run-up. The 6 key swing states that you and I need to watch out for: Arizona, Florida, Michigan, North Carolina, Pennsylvania, and Wisconsin. So those are the 6 key swing states. In terms of the campaign funds raised, Biden has raised $952 million and Trump has raised $601 million. What should we watch out for today and tomorrow? Today, November 3rd, is when the elections will end. Tomorrow morning, November 4th, is when we will get early trends. So by about 6 a.m., 7:30 a.m., November 4th, IST time, we will have a sense of the early trends. And of course, at ET Now, we will be dissecting some of that live. But these are some of the FAQs that you and I need to know. Hopefully, there will be a definite winner, and we won't be in a state of suspended animation in the days and weeks to come.
Okay, thank you, Chandra, for that. Well, with that, we'll wrap it up on the show. Thank you for watching.